ChartMill is one of the few financial research tools with such extensive filtering possibilities for both fundamental and technical analysis. Fundamental analysis focuses mainly on the key figures of a company in relation to the sector it belongs to, the general macroeconomic situation, and the quality of the company's management in order to obtain the real value of the company. Technical analysis looks exclusively at the historical price evolution with the aim of finding out the prevailing trend and identifying earlier price zones where the probability of buyers or sellers becoming active is considered higher. Both forms of analysis have, sometimes quite pronounced, pros and cons. To what extent you prefer one way over the other is a purely personal choice. At ChartMill, we believe that both forms can be complementary to each other. In general, it comes down to the fact that fundamental analysis is used to focus on the strongest companies, whereas technical analysis will mainly occupy itself with the question when the best opportunities, from a price point of view, will occur with those companies. In this video, I'll show you how to make a first selection of financially sound, somewhat undervalued companies on the basis of a number of fundamental ratios. And afterwards, we use a number of technical filters to determine which companies offer the best opportunities from a price perspective. So my name is Christoph. Welcome to ChartMill. Let's start with some pure basic filters. We have a minimum price of $5 or euros and a minimum volume of 300,000. This is purely to make sure that we exclude the penny stocks and that the shares we'll be left with are sufficiently liquid. After all, you do want to be able to buy and sell your shares easily. One filter I use here is the market cap. I select at least mid-cap. These companies have a market value between 2 and 10 billion. These are companies that have already built up some reputation, in contrast to many small caps, but still have more than enough growth potential in contrast to some really big companies. Under type, you have the choice between common stocks only or also all the ETFs, REITs and ADRs. But because we will be using a number of fundamental filters anyway, all tickers without those specific fundamental characteristics will be automatically excluded. As you can see, there are a lot of other basic filters possible. You can filter based on the stock exchange on which the shares are traded, the outstanding shares and float, or set a filter based on the sector, industry or industry group to which the stock should belong. It is even possible to use the IPO date as a filter. However, I recommend not to set a selection too strict at this stage. Personally, I always start quite broad, and depending on the number of results I can then add more filters or set existing filters a bit stricter. The longer you use ChartMill, the more feeling you get with it. Now that these basic filters are set, we can start with a number of fundamental filters. As already discussed in the intro, we will start with companies that are financially sound. These are primarily companies that have little debt or debt capital on their balance sheet. I've already made a separate video about it. There is a link in the top right corner of your screen and also below the video in the description. So if you want some more info of the usefulness and the reasons for those particular filters, definitely check out that video. Here I'm just going to set them up without discussing them in more detail. So debt to equity at max 1, operating margin and profit margin at least 15%, an Alt1 Z-score of at least 2, the current ratio 1.4 or higher, and a quick ratio of 1. And then I had also two more additional filters, a dividend yield of at least 2% and the price earnings lower than 15 but higher than 3. So with these fundamental filters we have already removed quite a few stocks. What remains is a fairly select group of stocks that all meet the set criteria. And on the basis of this list you can fine-tune further if you wish. For example, you can look at the sectors one by one so that you can easily compare the companies within those sectors. At this stage of your screening, the fundamental table view is the most useful because you get to see different fundamental filters next to each other which you can rank from high to low or vice versa. It is also possible to create a specific fundamental view table containing only the filters we have used so far in this video. And you can see exactly how to do that in this video, of which the link will now appear on the screen. The setting of such a custom view table in this video starts at 5 minutes and 55 seconds. As far as the technical filters are concerned, there are equally numerous possibilities, and I'll limit myself to a few possible angles that can help you further along the way. If, for example, you want to exclude all stocks which are currently declining in the long term, ChartMill has various ways of doing this. The first way is probably the best known, where the trend is determined on the basis of the price relative to its 200 daily moving average. Stocks that quote above that average are in a positive trend, and if the price is lower than the SMA 200, the trend is negative. You can do this by selecting the Performance tab in the Stock Screener, and next to the item Price versus SMA, you can choose the option Price above SMA 200. However, you can also work through the Indicators tab, and next to the entry ChartMill Trend, choose the option Long-Term Trend Positive. With this option, the long-term trend of the stock is determined on the basis of the ChartMill Trend Indicator, a 30-week average line which is used on a weekly time frame. Depending on which option you prefer, you will see more or less candidates. Be sure to check them both to compare the results. To identify stocks that are overbought or oversold based on specific technical indicators, the RSI or stochastics indicators are often used. In ChartMill, you can filter on the basis of the value of the RSI or stochastics. And I will first give an example of an RSI filter. Make sure the RSI is visible on your chart. To do so, click on the main chart menu and then click on the plus sign. Click once in the Select Indicator to Add box. A drop-down menu will appear. Now click several times R until you see the RSI appear in the selection box and select it. Click on Add Indicator. Now to set the RSI filter, go to the Indicators tab. Click on the triangle next to RSI and select, for example, that you want to see all the stocks whose RSI crosses the 30 level upwards. This is an indication that the stock is bouncing back after being in oversold territory. Depending on the market situation, you will get many, few or even no results at all. If you prefer to filter on the basis of the stochastics indicator, that is also possible. Again, first make sure that this indicator is visible above or below your chart. Proceed in the same way as for the RSI indicator. For example, if you only want to keep shares of which the stochastic indicator is higher than 50 while rising, you can set this via the drop-down menu. Be sure to try out the other possibilities as well. These indicators allow you to quickly find, within your selection of fundamentally strong companies, the companies that are currently listed in the oversold zone. Support and resistance are pretty much the backbone of technical analysis. They are levels that are monitored by many technical traders because they represent a price zone where there has been a lot of action in the past and where it is assumed that in the future these zones can also play a crucial role, at least in the short term. ChartMill is equipped with a completely separate tab with filtering option based on support and resistance levels. In this video, starting at 7 minutes and 45 seconds, I go into more detail about all the selections options. First, select the main chart and remove all the remaining indicators and overlays. Then make sure that the support and resistance lines are visible on the chart by adding them as an overlay on your chart. You do this by clicking on the plus sign in the main chart tab, and in the field Select Overlay, press the letter S several times until you see the option Support and Resistance Lines. Then click on Add Indicator. All you see now are support and resistance zones, both horizontal and diagonal, automatically generated by ChartMill. These are certainly not perfect, but it does ensure that specific support and resistance levels and channels are quickly recognized. Red is resistance and green is support. The first two tabs, Resistance R1 and Support S1, take into account the diagonal support and resistance lines. And you can set up how far the price should be from the next diagonal resistance or support, how long this support or resistance zone should exist, and how many times the price already had to test this specific zone. As an example, I set up the following filters. For resistance R1, I choose current 2% from R1. R1 length greater than 50 and R1 strength greater than 3. This means that we will only keep the shares of which the price is at less than 2% of the closest diagonal resistance line and where the diagonal resistance line has existed for longer than 50 periods, which in this case is 50 trading days since we are working with the daily charts. The last filter stipulates that the diagonal resistance level has already been tested at least 3 times by the price. Another example using the Support S1 filter. In this case, I choose the option Current 2% from S1 and I set a minimum length on this diagonal support to at least 100 periods. Now, what you see are the stocks that have fallen and are currently at less than 2% from a diagonal support recognized by ChartMill. This is a good way to filter out stocks whose price is pretty close to the bottom of a diagonal trend channel. The two tabs next to it, horizontal support and horizontal resistance, proceed in the same way, but only take into account horizontal support and resistance levels. Now, keep in mind that the horizontal and diagonal support and resistance lines do represent a specific price, but not only that specific price is valid as support or resistance, of course. Look especially of the location at the price in relation to the lines. This is precisely why I myself usually use the option consolidated support and resistance. I find horizontal support and resistance levels in any case the most pleasant to work with, but the consolidated element ensures that the price zone becomes visible instead of just one specific line, and you can then apply specific filters to that price zone. First, we have to make sure that the price zones are visible on the chart. You do so by choosing the option Consolidated Support and Resistance and add Overlay. Remove the existing overlay support and resistance lines to keep the charts clear. For example, current 1% from CS1 and CS1 strength bigger than 4. With this, I obtain all stocks whose price is at most 1% from the next support zone identified by ChartMill and which has already been tested or touched at least 4 times in the past. Momentum has to do with the size and strength of the movement. A significant rise in price under high volume means that there are many interested buyers. In that case, we speak of rising momentum. Suppose, for example, that we want to refine our first fundamental selection to only those stocks that show a price increase of at least 1% on a weekly basis and where the total volume today was more than the average volume over the last 50 trading days. We do so by clicking on the Performance tab and then setting the bar under 1 week performance to at least 1%. The volume filter is set via the Indicators tab, where under Volume Increase we set the volume to at least 10% more than the average volume measured over the last 50 trading days. The filters to be used in this case are of course highly dependent on the market environment. For example, if I want to know which of these financially sound companies are trading close to their 52-week low, I can do that quite easily from the Performance tab, where under Signal I select the option within 5% of the 52-week low. If you then once again add the overlay Consolidated Support and Resistance, you can very easily see how the price relates to the next support, which represents at this point the lowest 52-week price. Stocks that rise sharply generally are not doing so in one mega movement. Usually there is a sequence of higher lows and higher tops. The intermediate lows are also called price retracements, and an easy way to identify the stocks which may be forming such a new low is by using a number of averages. Suppose, for example, that you want to see the stocks which are rising in the long term and whose price is now quoted quite close to the also ascending SMA 20. First of all, we are going to use a trend filter which determines that the stocks we are looking for are actually in a long-term rising trend. To do this, I select the option Long-Term Trend Positive under the ChartMill trend menu in the Indicators tab. Then I go to the Performance tab, and for the SMA 20 itself, I select SMA 20 Rising. Next, for price versus SMA, choose the option Price in 2% range of the SMA 20. Make sure the SMA 20 is added as an overlay to your charts. Now you get all the shares that are rising nicely, but whose price has currently fallen back a bit to somewhere near the rising simple moving average. And again, you can combine this with visualizing the consolidated support and resistance zones to find very nice setups. In this case, 2 stocks are withheld. Star Bulk Carriers is showing a short-term sideways channel, but Coterra Energy is showing a nice pattern of higher highs and higher lows. The current close is just beneath the SMA 20, while it's also close to a significant support level. So this stock can definitely be put on a watch list to monitor if a new higher low is imminent. This brings us to the end of this video. I hope I've been able to show you some benefits of combining fundamental and technical screen filters and taking into account the current market conditions. Blindly buying stocks because they are severely undervalued from a fundamental viewpoint is perhaps not the best idea. And just by making support and resistance levels visible on the chart, you become aware of the most significant price levels, and you can use those as a starting area and adjust your orders accordingly. So discover for yourself all the possibilities ChartMill has to offer, and if you don't have an account already, be sure to make one. It's completely free and it stays free. You only need a valid mail address. No paying information is required whatsoever. And to be absolutely clear, free accounts are never automatically converted into paying accounts. Be sure to let us know in the comments below which combinations you use to find the best setups to trade. So I see you next time. Trade safe.